Well, Theo, it's the beginning of 2020, and when we sit down to talk about the year ahead, we always start by looking at the year that was past, 2019. And you and my discussions about this, I always look back and I think 2019 was a terrible year to be a South African. That's what it felt like to me. We started the year thinking maybe things will get a bit better. We had the elections, then it was Cyril's real cabinet, I guess, and his real form of government. And in between then, nothing really felt like anything was going well. It just didn't feel like a great year. And then to end the year, we go to stage 6, load shedding with Eskom, and the real prospect of starting 2020 with actually even more bad news around Eskom and potentially other things as well. So for me, the only highlight I can think of as a South African was probably winning the Rugby World Cup, and that was wonderful and totally unpredictable. But having said all of that, what did the investment markets do for us?
I think it's if you just talk to clients and you talk to people, it was an uncomfortable year. But now the one thing that really stands out is with all this uncomfortness around, this unease, this threats of downgrades of rating agencies, not happy with what we're doing with Eskom. The interesting thing is the equity market had actually had a good year. If you look at the JSE All Share Index total return, December alone it was up just more than 3%, which means over the year the total return on the All Share Index was up just more than 12%. The bond index, that's the fixed interest market, that was up just more than 10% for the whole of the year. Now put that into context with an inflation rate of, for most of the year, the latter part of the year, between 3.5% and 4%. It actually did well. And I think it proves a few points. The first thing, it proves that there's not a very good correlation between the economic growth, which is a historic number, and equity performance or market performance, which is forward-looking. And that makes it rather difficult to compare these. So one must be very, very careful not to use historic sets of numbers and let's say the noise in the media and take that and put that onto financial markets and equity performance. Yes, it was in pockets, and it was driven mostly by commodities and a few other international stocks. But overall, the JSE actually had a great year. For me, you talk about the highlight of the year. For me, the highlight was on the 28th of August last year, when Treasury issued the strategy document, Tito Mbowene's document as it's referred to. That document has stuff in there that if only the rest of the government, the rest of the party can buy into that document, because that defines a very strong role for private capital, for private initiative, and for partnership. So perhaps there is some light if you look at that specific document. But if one were to look at from an investment point of view, we're in the beginning of the first year of a new decade. What should one be focusing on?
Well, Theo, I think for this year and maybe for the start of the decade, it's really important not to get caught up in all the emotions and all the media hype that you were talking about. Whenever we're in a situation like this where there are so many variables, so many things that could drive our markets up or down, both in South Africa and overseas. I mean, let's not forget, we've got Trump, Boris Johnson, Putin. We've got a collection of crazies that are in real control of some of the biggest countries in the world, and all of those factors could derail any kind of an investment plan that's based on the next 12 months, what we think is going to happen. So I think it's really important to remove that short-term focus and to move out, to think longer term. So as a starting point, I think it's always critical in the South African context to look at your own allocation. How much have you got in South Africa? How much have you got overseas? Don't be swayed by what's going on in the news to decide how much you should have overseas. There's a critical factor in terms of your age, how much money you've got, what your plans are for your life, what your children's plans are potentially, and those are the factors that you use to decide how much you have overseas, not what the newspaper says today or tomorrow. So when you make that decision about local overseas, use your personal circumstances and make sure that you talk to your advisor about that, because it's a critical decision point. Secondly, when you decide to send the money out, look at the rand dollar. There's a range that's optimal for investors. In the current environment, that might be somewhere between 14 rand and 14.50 to the dollar, and don't be too excited if it goes to 14.80 to suddenly send all the money out. Wait until it comes back into that range, and again, speak to your advisor, because we update that kind of a number quite regularly. And then I think it's also important to understand the mix of your assets. How much have you got in shares? How much have you got in property? How much have you got in cash and government bonds? And the fact that the JSE had a great year last year doesn't mean now that you sell every other asset that you have and put it all into the JSE, expecting that the JSE will deliver another year of 12%. It could easily do that, and we all hope for that, but that's not a guarantee. So it's important to have the right mix of assets, and that will, again, it'll be dependent on your financial position, your age, how long you've got to work if you're still working, how much you're drawing from your money if you're retired. So it's making sure that you've got the right asset mix as well. And then if you've got big lump sums that you need to invest or that you need to draw out, be careful of doing it all in one shot, because there's so much uncertainty, so much volatility. We would always say in this kind of environment, be careful just to feed that money into the investments or feed it out again if you need to. The only time we're not suggesting that is with the exchange rate. When the exchange rate is in the band, we think that's the time to take advantage and to send it out. Most importantly, use your own strategy to be rational. Don't get swayed by what's going on all around you. Sometimes it could be the media, sometimes it could be your friends or your family that could push you in a direction to make a lousy decision at the wrong point in time. So your strategy, your personal circumstances are the real guiding points in making sure that you develop your plan for yourself. And the fact that markets haven't done well over the last 5 or 6 years isn't necessarily a reason to make major changes. As you said, the JSE's done well over the last year. It might be the start of something new, we don't know, and it might be a payback for those investors who had the right strategy, have had the right allocation to the JSE, but haven't really been rewarded properly over the last 5 years. They could well be rewarded for the next 5. And then my last point is, be careful of too much pessimism. I think the fact that the resources sector in the JSE did really well and drove our market up in addition to those international shares, if that trend continues, there's no reason why investors won't benefit from that. It doesn't matter that our economy might be stagnant or might go down, etc., etc. We don't know what it will do. But if there are those international factors driving the JSE, that could be a reason for good returns. We just don't know. And I think that's the point. Move away from predictions, move away from forecasts. Don't be too optimistic and don't be too negative. Try and stay down the middle, rational, and make sensible decisions over the long term. And then take a long-term focus. I think it's the start of a decade, and I think worry about how things are going to unfold over the next 10 years, not the next 10 days or 10 weeks. But what we would say is stay the course.